So it's a new year and a lot of people want to start investing their money and also start taking more serious financial decisions and plans. But some of the things that always prevent people to not even start investing is that they don't really know what to actually invest in or what to choose between all those bonds, the crypto, the ETFs and stocks of the world. But for the sake of today's video, today I'm going to be talking about the stocks versus the ETFs, the advantages and disadvantages of ETFs and stocks, and lastly, which investment vehicle is better between the two and what it means to you as an investor. Yo, what's up guys, it's the boy Shiva Malakwan and welcome back to the channel where I talk about personal finance, investing, and everything that you need to know about money. Please note that I'm not a financial advisor, and if you're seeking for any financial advice, please be sure to look for someone who's certified and also who's registered with the FSCA. And guys, I think recently I've noticed that 88% of the people who are watching my videos are people who actually not subscribe to the channel. So if you are currently watching my videos or currently watching my content, you are enjoying my channel, please be sure to subscribe to the channel. Also, don't forget to like these videos because they also really help me know what type of content you guys enjoy so that I can make content that is curated to your likes and also to your needs. So first, what are stocks? So a stock, also known as an equity, actually represents an ownership in a particular company. So when you purchase a certain stock, you are actually buying a small piece of that company and also becoming a shareholder of that company. So as the company grows and also becomes more valuable, the value of your stock also increases. But also similarly and conversely, if the company struggles, the value of your stock can also decrease. So stocks can also be bought and sold on stock exchanges such as the JSE, the NYSE, or the Nasdaq, and the price of a stock is actually determined by supply and demand in the market. So investing in stocks can also be a way to grow wealth over time, but it also comes with the risk that the value of your investment may also decrease. That basically means that an individual stock can perform phenomenally over time, but they may also be volatile in the short term, fluctuating massively. It is not also unusual for high-flying stocks to decline 50% in a given year on their way to a long-term outperformance. On the other hand, also, a strong stock might also go up by 50% or more in a single year, especially if the overall market is also hot. And moving on, what is an ETF? So an ETF, or an exchange traded fund, is a type of investment vehicle that actually allows you to purchase a basket of assets all at once. So instead of buying individual stocks, you can actually buy shares in an ETF that tracks a particular index or a market sector. So for example, let's say that you purchase an ETF that tracks the S&P 500, which actually includes the top 500 companies in South Africa or in the United States. So ETFs are traded on the stock exchanges and their prices fluctuate based on supply and demand, just like stocks. And one of the main benefits of ETFs is diversification. By purchasing a basket of assets, you are actually spreading out your risk across multiple companies and also sectors. This can be helpful in reducing overall risk, as it also is unlikely that all of the companies in that ETF will perform poorly at the same time. So ETFs can also be easily traded throughout the day on stock exchange, just like individual stocks. And it's also worth noting that ETFs usually have an expense ratios, which is the ongoing fee charged by the fund to cover its operating expenses. And it can also eat into your returns over time. So the return in an ETF depends on what it's invested in. So an ETF's return is the weighted average of all its holdings. So if it owns many strong stocks, the ETF will actually rise. And also if it owns many poorly performing stocks, then the ETF will also decline. So now that you know what are ETFs and also what are stocks and how they actually work, now I'm actually going to be talking about the advantages and disadvantages of both investing in ETFs and stocks. So starting first, what are the advantages of investing in stocks? So number one, potential for high returns. So historically, stocks have provided high returns than other investment options such as bonds or cash over the long term. And also this is because stocks are typically considered higher risk investments, and also investors are rewarded with higher returns for taking on that risk. And number two, potential for capital appreciation. So stocks have the potential to increase in value over time, which can lead to capital appreciation. And this happens as the company grows and becomes more valuable, leading to an increase in the stock's value. And number three, dividend income. So some stocks pay dividends, which are regular payments made to shareholders out of the company's profits. So dividend income can actually provide a steady stream of cash flow for investors. The fourth advantage of investing in stocks is all about liquidity. So stocks are highly liquid, meaning that they can easily be bought and also sold on stock exchange. This makes it easy to buy or sell stocks as needed. And number 5, diversification. So investing in a variety of stocks can actually provide diversification, reducing the overall risk of your portfolio. And lastly, number 6, potential for inflation protection. So stocks have the potential to provide inflation protection as the company's earnings and dividends can also grow over time. So those are the advantages of investing in stocks. Now let's move in and talk about the disadvantages of actually investing in stocks. So the first disadvantage of investing in stocks is risk. So the value of individual stocks can actually be highly volatile and can also fluctuate dramatically in response to market conditions, the company's performance, and also other factors. So this basically means that there's a risk of losing all your money in all these investments. Number 2, the lack of diversification. So investing in individual stocks can be risky because you're actually putting all your eggs in one basket. And also, if all the companies you've invested in perform poorly, it means that all your entire investment is also at the risk. And number 3, lack of liquidity. Some stocks may not be traded frequently, which makes it to be very difficult to buy or sell them. So this lack of liquidity can also lead to wider bid-ask spreads, which basically means that you may have to pay more to buy a stock or receive less when you sell it. So number 4 is timing. So timing the market is a very difficult task, and it is hard to predict when is the best time to sell or to buy a stock. And also investing at the wrong time can also lead to significant losses. Number 5, research. So investing in individual stocks requires research on companies' financials, management, industry trends, and also other factors. So this can be actually time consuming and also may not be suitable for all investors. Last but not least, the fees. So buying and selling individual stocks can also incur brokerage fees, which can actually eat into your returns. So with all that being said, now let's go back and talk about the advantages and disadvantages of actually investing in ETFs. But before I do that, so if you've watched this video till this point and you haven't subscribed to the channel, please be sure to subscribe to the channel, and also don't forget to like this video and comment some of your favorite investment vehicles, because that would actually mean a lot to me. So without wasting any time, let's get straight back into the video. So let's talk about the advantages of actually investing in ETF, because there's a lot of advantages, which actually include number 1, diversification. So ETFs actually allow you to purchase a basket of assets all at once, which can actually provide diversification and also reduce the overall risk of your portfolio. This is because ETFs actually hold a variety of assets such as stocks, bonds, commodities, or a combination of them, and which makes it less likely that all the assets will perform poorly at the same time in that ETF. The second advantage is low cost. So ETFs actually have a lower expense ratios than actively managed funds. This means that you can actually pay less in fees, which can actually help increase your overall investments or returns. And the third advantage is liquidity. So ETFs are traded on stock exchanges, and their prices also fluctuate based on supply and demand, just like stocks. So this makes them highly liquid, and also for them to be easy to buy and sell as needed. And the fourth advantage is tax efficiency. So ETFs are generally considered tax efficient because they typically have low capital turnovers than actively managed funds. So which basically means that they generate fewer capital gains than needed to be taxed. The fifth advantage about ETFs is that ETFs offer a wide range of variety options for investors, including those that actually track specific market sectors such as the indexes, the commodities, and also even bonds. So this gives investors the flexibility to choose an ETF that aligns with their investment goals and also their risk tolerance. And last but not least, transparency. So ETFs are actually required to disclose their holdings on a daily basis, which allows investors to actually know exactly what they're actually investing in. So we have talked about the advantages of investing in ETFs. Now let's go back and talk about the actual disadvantages of actually investing in ETFs. The first disadvantage is risk. So ETFs, like any other investments, carry some level of risk, and the value of an ETF can actually decline if the underlying assets perform poorly. And additionally, leveraged and also inverse ETFs, which are actually designed to amplify returns, can also carry a higher level of risk. Number 2, tracking error. So ETFs that track a specific index may not perform exactly as the index does due to the ETF's management fees, expenses, and also other factors. So this is actually known as tracking error. So number 3, lack of control. So when you invest in an ETF, you're actually relying on the fund manager to actually make decisions about actually which assets to include in the fund and also how to weigh them. So this can also be a disadvantage for those who actually prefer to actually have more control over the investments. And number 4, short-term trading. So some investors may use ETFs for short-term trading, which can lead to higher transaction costs and also capital gain taxes. Number 5, limited coverage. So ETFs may not cover all the markets or sectors, which could limit the investment options for some investors. And last but not least is lack of personalization. So ETFs are created to track an index or a sector, which means that they may not align with every investor's specific needs or risk tolerance. So when deciding whether to pick stocks or to select an ETF, look at the risk and also the potential return that can be achieved. So stock picking also offers an advantage over ETFs when there's a wide range of dispersion of returns from the mean. And with stock picking, you actually have the ability to actually gain an advantage of actually using your knowledge of the industry or the stock. An ETF actually offers advantages over stocks in two situations. So first, when the return from the stock in the sector has a narrow dispersion around the mean, an ETF may actually be the best choice. And second, if you are unable to actually gain an advantage through the knowledge of the company, an ETF is actually the best choice for you. Whether you are picking stocks or an ETF, you need to stay up to date on the sector or the stock in order to actually understand the underlying investment fundamentals. You do not want to see all of your good work actually go to waste as time passes, while it is also important to do a research so you can actually be able to choose a stock or an ETF. It's also important to actually research and select the broker that best suits you. So with all that being said, guys, hopefully you've actually enjoyed this video, and if you actually want to watch more of my videos, then I highly suggest you to watch this video right here where I talk about how you can actually start researching about stocks for beginners. Or if you don't want to do that, then you can highly also watch this video right here where I actually talk about how you can actually buy stocks using easy equities or buy shares using easy equities rather in 2023. So guys, hopefully you've enjoyed all of my videos, and also if you want to watch more rather, I suggest you to watch this one, and I'll see you on those videos.